Hello, today is Sunday, June 7th, 2026. Here is your daily signal. According to Bloomberg, gold prices experienced their steepest drop in 2 months as robust U.S. jobs numbers fuel renewed bets on Federal Reserve rate hikes, sending shockwaves through the bond and mortgage markets. The U.S. bond market has seen heightened volatility throughout 2024 due to fluctuating economic indicators and tense fiscal policy debates, with mortgage rates tightly tethered to Treasury yields. Recent swings began after contrasting jobs reports and ongoing uncertainty about the federal budget, making the Fed's rate decisions particularly crucial for both bonds and loans. Reuters reports that bond yields surged on June 6, 2026, after a much stronger than expected jobs report, while CNBC notes that 30-year fixed mortgage rates have risen to 7.25% as Treasury yields climbed. Bloomberg highlights that policy debates in Congress have delayed a budget agreement, injecting uncertainty into bond pricing. All this volatility means the government now faces higher borrowing costs, and elevated mortgage rates threaten housing affordability and market activity. If fiscal instability continues, investors may demand even higher yields, potentially pushing up corporate borrowing rates over the medium term. Protracted uncertainty could also deter foreign investment in U.S. debt, putting more upward pressure on long-term rates. Next, let's look at the impact of soaring costs for World Cup fans. Fortune reports that soccer fans are now skipping the World Cup over extreme prices, with even longtime supporters saying the price tag has put attendance out of reach for many. The 2026 FIFA World Cup, jointly hosted across the United States, Canada, and Mexico, is scheduled from June through July. Historically, ticket prices at major sport events rise as demand increases, and this edition expects millions of international visitors whose expenses are further exacerbated by climbing airfare, hotel, and ticket prices driven by inflation and event popularity. Business Insider highlights individual accounts, with some fans revealing unprecedented spending just to participate. FIFA sets ticket pricing policy and oversees logistics, while travel companies like Expedia and airlines such as American Airlines are seeing heightened demand. Key host cities including New York, Los Angeles, and Toronto must manage infrastructure for the surge in fans, while supporter groups continue to lobby for fairness and accessibility. Near term, this expense spike will discourage attendance from low-income regions, reducing the diversity of crowds. Medium term, reduced fan turnout could lower economic impact in host cities and suppress merchandise sales. If accessibility becomes a trending issue, FIFA may face reputational risks and pressure to reform pricing, and this event could set new precedents for affordability at future sporting tournaments. Now, let's shift to the strategies shaping the business of AI cost control. TechCrunch reports that companies are scrambling to rein in the runaway costs of deploying AI models, with the conversation shifting from maximizing speed and scale to building guardrails and improving efficiency. Deploying advanced AI requires substantial computational resources, with token efficiency optimizing how models process and generate text becoming a leading tool to cut operational expenses. Cost control strategies include minimizing model sizes, using scalable cloud infrastructure, and real-time monitoring of token usage. Organizations are now investing heavily in both software and hardware upgrades. Major players like OpenAI, Google, and Amazon are actively building cost-efficient deployment solutions, with cloud providers such as Microsoft Azure and AWS underpinning large-scale workloads. Startups specializing in token optimization are attracting more venture capital, and research institutions collaborate with industry to develop efficiency benchmarks. According to latest industry updates, OpenAI launched a token optimization framework on June 6, 2026, claiming a 30% reduction in inference costs, while Amazon Web Services expanded their infrastructure offerings for improved cost controls. AirTrunk, meanwhile, has committed $30 billion to constructing AI data centers in India, and Google recently agreed to pay SpaceX $920 million per month for compute power, marking a major shift in infrastructure investments. In the near term, more startups could enter the field with specialized efficiency solutions, intensifying competition. Over the medium term, large enterprises may see operating costs drop, making AI more affordable and expanding its reach in sectors like healthcare, finance, and logistics. Enhanced token efficiency will likely enable real-time AI applications that were previously stymied by processing costs. Now, onto the markets. International markets saw broad declines, with Germany's EWG dropping 2.2%, while France's EWQ fell nearly 2%. The United Kingdom's EWU closed lower by 1%, and Italy's EWI slipped 1.8%, as Spain and Netherlands also lost ground. Chile's ECH pulled back 3.4%, Belgium's EWK was nearly flat, and Australia's EWO declined about 2%. China large cap represented by FXI fell 2% on recent weakness, and Japan's EWJ dropped 3.6%, while India's INDA was off 1.4%. Taiwan's EWT led Asian declines with a 7% daily drop, though monthly gains were positive. In commodities, gold dipped 3.7% amid broader declines, silver dropped 8%, oil tracked by USO retreated 2.7%, and platinum slid almost 6%. Agricultural products such as DBA and corn eased slightly, while uranium ETF URA fell nearly 10%. In sectors, the S&P 500 SPY slipped 2.6%, driven lower by semiconductors stocks off more than 10%. Healthcare Roman 45 managed a modest 0.6% gain, while Finance XLF and Real Estate XLRE ticked up fractionally. Among individual stocks, AMD sank 10.9% and Oracle slid 9.6%, while Microsoft MSFT fell 2.7% and Nvidia NVDA was off 6.2%. ARM dropped more than 12%. Gainers today included Springview Holdings SPHL, which surged over 100%, Skage Future SCAG up 82%, and Gamehouse Holdings GMHS rising 74%. Nuwellis New was among the day's sharpest losers, down 65%, while Defiance PL ETF PLU plunged 52%. That's it for today. You can find more news and details on our website. Goodbye.